Hello, everyone, and thank you for joining us for another SCRLA webinar to help you, our members, be operationally efficient. I'm Douglas O'Flaherty, and I will be today's moderator. Today, we are talking tax credits. This past December, President Trump signed into law the Consolidated Appropriations Act of 2021. In that expanded the eligibility for employee retention tax credit, also known as ERTC, whereas you may be eligible to get up to $19,000. If that wasn't enough, we're also going to hear a business located in a qualified disaster zone, and we have many here in South Carolina, may be eligible for federal disaster relief credits, tax credits up to $2,400 per eligible employee. Joining us today is Lori Childress and John Hotstetler with Empowered Solutions Group. John is a current managing partner and former director of business development for one of the nation's largest tax solution firms. John has helped commercial real estate owners, investors, and business operation entities realize significant tax savings and increase ROI through valuable tax planning tools, such as accelerated depreciation and capital reserve analysis, economic development programs, and energy efficiencies. He also works closely with accounting firms to provide valuable resources for their clients. John provides accounting or continuing education and practice development seminars for various professional organizations throughout the year. John has over 14 years of experience in the real estate and business development arena. He has worked with a wide range of property types to include retail, medical, multifamily, office, restaurant, energy facilities, and multi-phase mixed-use large-scale planning community developments. Joining him is Lori. She is the Vice President of Business Development from Anderson, South Carolina, a graduate of the University of South Carolina in Hotel, Restaurant, Tourism Management, so we know she is well versed in the hospitality industry. Lori's career has been spent both in hotels and the staffing industries, both in sales, management, and recruiting. Lori joined Empower Solutions about a year ago and serves at the South Carolina Business Development role to assist her clients in researching federal and state tax credits, economic development, cost segregation studies, and other research and development opportunities. At this time, I'll turn it over to John to tell us a little bit more about Empowered Solutions Group.
Thanks, Douglas, for the introduction. And the Empowered team looks forward to working with the SCRLA and its membership. Today, we're going to discuss two programs that we provide to our clients in the hospitality industry that have had significant positive impact on their bottom line. But first, let me tell you about Empowered Solutions and our team. We're a full-service consulting firm located on Daniel Island in Charleston, South Carolina. 17 years ago, I started working in the consulting industry, and I quickly realized there was a disconnect between businesses and what I call boutique tax services and those services that are outside what your normal CPA would provide. 2 companies later, we have succeeded in bridging that gap through our strategic partnerships across the country with our CPA firms and associations like SCRLA. Our 2 main areas of core competencies, our tax-based strategies and our economic development services, allow us to have a real positive impact for our clients. Our team is comprised of CPAs, engineers, former IRS revenue agents, and seasoned business development professionals that are experts in the fields of cost segregation, economic development programs to include federal, state, and local programs, tax credits, and research and development credits. The first program that we're going to talk today that you had mentioned, Douglas, is the FDZ, and it's Federal Disaster Zone and what is commonly referred to as the FDZ. The Federal Disaster Zone credit is a federal income credit. The most recent legislation passed was the Consolidated Appropriations Act of 2021, which included an amendment to the FDZ employee retention credit by adding new disaster zone designations effective for 2020. And those new designations included new counties in South Carolina and North Carolina. These important tax provisions included disaster tax relief and extensions of certain employment-related tax credits for those businesses affected by natural disasters. These relief measures assist businesses affected by various storms in 2017, 2018, 19, and 20. For employers, this relief package provides targeted tax relief in the form of federal disaster zone employee retention credits for wages paid to employees whose principal place of employment at the time of the storm was in a specified disaster zone. The details of the tax credit are stated as qualifying businesses having an active trade or business within that specified disaster zone. They may seek the FDZ credit for continuing to pay their employees during the incident period. The FDZ credit is 40%, as you mentioned before, $2,400. So 40% of a $6,000 wage base. The start date of the qualifying period varies depending on the specific event, the storm, and the employee's operations. So who is an eligible employer? Any employee with a location in a federal disaster zone, and furthermore, a designated county. As you can see on the map, the counties that are circled are in active federal disaster zones currently. Who is an eligible employee? Any employee hired prior to the storm date and paid during the incident period. What storm qualifies and what are the dates? Federal disaster zones and the dates are set by the federal government and FEMA. And what is the incident period? Well, the incident period is defined as the specific period within the storm date that the employer was affected and can vary with the employer and business. So now that we've discussed the guidelines and legislation of the federal disaster zone and the credit, let's talk about current federal disaster zones, as you can see on the map, that are in South Carolina and North Carolina. As many of you are probably aware, in 2018, 2019, Hurricane Florence came up through the coast of South Carolina and North Carolina and affected a lot of the businesses with that hurricane. In that particular case, we've been working in that area for the past 2 years since that designation was given, and we've been able to work with numerous businesses over that period of time. Some real life examples of projects that we've worked on up there. We had a full service restaurant that was able to receive, and they qualified for $80,000 in income credits for the federal disaster zone. And we had a hotel, 2 hotels that qualified for $210,000 in FDZ credits. And we've heard it along the lines of it's a common misconception, and it's important to note that, employers and businesses, restaurants, hotels, whoever they may be, they think that, we have to be closed down. We have to have physical damage for our business to qualify. And while those are qualifying factors, the term affected can mean a lot of different things. And your loss of revenue to your business because appointments canceled, because there were flooding, roads were closed, there was a mandatory evacuation, things like that are qualifying factors as well. So what we always tell clients is if you're unsure, but you were in business during that incident period, during that time, then this is a program that certainly can have a positive impact on your bottom line, and it's worth evaluating. So now let's look at another program, Douglas, that you mentioned. If you'll go back to the previous slide, and we're going to talk a little bit about the CERC, the COVID employee payroll tax credit. As I'm sure everyone's heard and been involved with, we've been dealing with a pandemic over the last 15, 16 months. And on March 27th, 2020, the Corona Aid, Relief, Economic Security Act, the CARES Act, was enacted. This CARES Act provided 2.2 trillion of economy-wide financial stimulus monies in the form of financial aid to individuals, to businesses, nonprofits, states, and municipalities. One of these programs was the Employee Retention Credit, and that is a payroll credit in what we refer to, and I'll refer to it as a CVERC. Its purpose was to encourage businesses to continue to keep and pay their employees by offering a refundable tax credit for qualified wages paid to eligible employees. What businesses qualify? Eligible employers include businesses that were either fully or partially suspended and their operations were suspended during any calendar quarter in 2020 due to orders from an appropriate governmental authority that limited commerce, travel, meetings due to the COVID-19 pandemic. Or they experienced a decline in gross receipts during that calendar year. On December 21st, 2020, Congress passed the Consolidated Appropriations Act of 2021, which included amendments to the CARE Act and the CVERC by extending the credit and expanding the business eligibility. Extension of the CVERC was through June 30th, 2021, which is the first 2 quarters of 2021. In this extension and modification, the CVERC payroll was increased, the tax credit rate of qualified wages from 50% in 2020 to 70% in 2021. It also reduced the gross receipts reduction requirements year over year from 50% in 2020 to 20% in 2021. It also increased the per employee credit limit from $5,000 in 2020 to $7,000 in 2021 per quarter for the first 2 quarters. It also provided that if a business took PPP money, now it can also take advantage of the CVERC credit if it qualifies. So again, like we did with the FDZ, some real life examples of businesses in the hospitality industry qualifying for this particular payroll credit. We worked with a chain of restaurants. They had 3 restaurants, and they originally were told initially that they could not qualify for the CVERC. And after our review and completion of their report, we were able to secure them $135,000 in credits. So, there's a matrix of qualifying factors. It's not limited to one thing. And so really, initially, you have to really dig down into those details to figure out, whether or not these businesses are going to qualify. And we also had a hotel group that received $210,000 in payroll credits as well. So, I would encourage, as I said before, any of your membership that owns a restaurant, has hotels, has a resort on the coast, if you're not exploring these programs that are offered by the feds, they need to be evaluated, and they are good programs, to help offset some of these losses we've had over the last year during the pandemic, and really boost the bottom line as we move into hopefully getting through this pandemic and moving forward. So those are the 2 programs. Douglas, I'll be glad to answer any kind of questions that we have now, and Lori will be glad to answer those if we have any questions.
Great. John, sounds like a great opportunity for folks to really find some found money that they're entitled to. So thank you so much for the information. I think we do have some questions in the Q&A box. Lenza, are there any questions?
Yes, we actually have a couple that came in. So the first one, I'm a restaurant owner in 5 Points in Columbia. After heavy rains, my restaurant floods. Do I qualify for the federal disaster zone tax credit program?
Good afternoon. So I'm Laurie Childress, and I'm based here in Columbia. And thank you. That is a great question. Unfortunately, in this particular situation, the answer is no. As I said, I live here in Columbia, just a few miles actually from 5 Points. So I'm well aware of the drainage and flooding issues after a hard rain or storm. And unfortunately, in short, you have to be located in a federal designated county or a designated storm period. And so if you want to go back to the map, Douglas, if you don't mind. So for instance, we've been talking about Hurricane Florence. So if you are in Georgetown, if you are in Horry County, Florence, Marion, Dillon, Marlboro, Chester, and Darlington, you automatically qualify. Okay.
Well, just to clarify, Lori, you automatically are eligible.
I'm sorry.
Yes. And then we'll go through that process of seeing on whether or not that you qualify. Yes.
Absolutely. So if you're in that zip code, you would want to investigate, what or how much federal tax credits you're eligible for. Okay.
Okay.
Thank you for the question.
We have another question that came in as well. I lost power and had flooding in my hotel during Hurricane Florence. I'm in Horry County. Do I qualify for the federal disaster zone tax credits?
So absolutely, yes. So again, let's go back to the map, if you don't mind. So as I mentioned, when I counted, when we discussed Horry County, so Horry County is included in those 8 counties declared as a federal disaster zone during Hurricane Florence in 2018. Okay. So you, like we said just a moment ago, John said, you automatically are eligible for the FDZ credit. How much you qualify for is what Empower Solutions brings to the table. So we have the matrix and the calculations for to see what if and how much you qualify for. And we're able to do this using, some payroll data, and in some cases, some sales data from that storm period.
Thank you.
And it looks like we had one more question come in. I took payroll protection program money during the pandemic for my business. Can I still file for the COVID employee retention tax credit?
Great question. And this has been a very confusing topic for many businesses. The answer is 100% yes, absolutely. As we discussed earlier, the CARES Act made this possible, especially for hotels and restaurants. Much like the former question, Empower Solutions will ask you to answer a few questions to determine what money you qualify for. Again, if and how much.
Yeah, and just to further Lori's point, we spent a lot of time building an estimator in where we can plug and play with some of these numbers, because we understand businesses are busy, individuals are busy. And so to the extent we can come in and streamline that process like we have, it just makes everyone's life easier. So, we have a data set that we request. Obviously, if you took PPP money, we have to be able to back that out, those wages that were utilized for the PPP money. But there again, with the relief bill that was signed, you are able to take PPP money and potentially qualify for the CVERC.
Any other
Great.
questions?
Yeah, it looks like one more just came in. What type of time commitment do you need from my business to calculate these credits? I'm a very busy restaurant operator, and most days I barely have time to do the things to run my restaurant.
Absolutely, and I've definitely walked in your shoes. Well, I'm happy to say that it will take very little time on your end. Okay, and that's by design. We have a one-page document with roughly 10 questions, and we quickly get that information to our expert, who is, as John mentioned earlier, a former IRS agent. So depending on the size and scope of your hotel or restaurant, Empower will have those credit and refundable dollar figures, if found, back to you within 2 to 3 weeks after answering those simple questions for us. Again, as John said, we have the complicated calculations. We take that long period of time to dig to see what those credits are. We understand that you don't have the time to do that. And so that, of course, that's what we bring to the table. In fact, we charge nothing upfront, nothing to complete that upfront benefit analysis. And that way, our clients have all the information they need to make an informed decision, many times with their CPA. And if that restaurant or hotel chooses to move forward, then that at that time, there would be a percentage figure for that exercise. But we charge nothing up front to let's just see what that money is. Imagine there's $90,000 sitting on the table.
It's a
Great
great
question.
opportunity. Yeah.
Yeah.
Linda, any more questions? We're getting low on time.
It doesn't look like any more came in, no.
Okay.
So
Well, at this time, I do want to say, you have a final thought, Lori?
I do, and I'm so sorry, Douglas. I just wanted to emphasize that we talked about, the 2 credits today, right? So one being if you are in a federal disaster zone, okay? The other is basically the CARES Act and COVID related. Therefore, you are not restricted to any location. Your hotel, restaurant, business, anywhere in South Carolina, North Carolina, and all the other states are eligible to be reviewed to see what monies are there. So I just want to clarify that, we're not just talking about the coast. In this case, as it relates to South Carolina, everyone was affected in your industry.
So the CARES Act, ERTC, is pretty much virtually anywhere in the United States, and the federal disaster zones have to be in the qualifying counties.
Absolutely.
Okay. Well, thank you very much, John. Your explanation certainly does provide a great resource for our members to be able to find some extra dollars. Laura, I appreciate your assistance in helping clarify and answer the questions that are there. One of the missions of the South Carolina Restaurant Lodging Association is to be able to bring these programs to our members to let them know, and the fact that there's no out of pocket cost to even see if they qualify before going through all the procedures is absolutely amazing. So Lori and John, thank you very much for your time today. Lenza, thank you for your assistance as well. And I hope everyone has a great day. And if you have any questions, please let us know. I'm going to put the contact information on the screen here for all of our speakers today. Please take a moment, do a screenshot of it so you have that available for you. And if for any reason that you need anything, please reach out to us here at the office in Columbia. Thank you all and have a great day.
Thank you, Douglas. Thank you, Lindsay.